Talk a little bit about what impressed you the most when it comes to Netflix's results. I know that you were anticipating a strong quarter, and we did get that.
Yeah, honestly, it's sad they're not going to continue to announce subscriber numbers after they do 18 million in the quarter with a 10 million expectation. But, what it really is that the whole world wants to watch Netflix. It's the only international channel that wherever you are in the world, people can relate to. And now having sports events that transcend, the U.S. market into a global audience, not only has it opened up new potential subscribers for Netflix, it's also made all the leagues reconsider their typical strategy of broadcast networks being the first people they sell to and realizing that companies like Netflix have a much bigger reach. And if you're trying to reach an international audience like the NFL, it makes a lot of sense to use this platform. So they've now proven that they can make money in advertising and on subs and globally, and this is unique to only Netflix.
It's unique, and I like how you put it, kind of how they've become their own entity. They're like the new cable in a way.
It's global cable.
Right, global cable. But having said all that, they made clear in their shareholder letter that they're not focusing on acquiring rights to large regular season sports packages. When do you see that changing? It feels like a when, not if question.
I think it's not that as much as they have to make the economics make sense for them as they look at like how much do we spend per hour per content, so like if it costs them 10 million an hour or 20 million an hour depending on the different types of shows they're doing. So when you look at the NFL at 3.5 hours and you pay like 100 million for a game, it's expensive content. But what Netflix was able to do, which I was surprised about, was they ran all the typical ads. The show was actually produced by CBS. It was just like basically the same broadcast just on Netflix, but they got all the same ad money to offset the cost of spending the 100 million by then also making all their subscribers happy and getting new subscribers who want to watch sports. So it's a double win for them that they're able to, I'm paying for premium content, $20 a month, but I'm still watching ads if it's sports. So that's a win for Netflix.
I am curious, though, Ross, when we talk about, it's interesting to kind of see how the platform has evolved. With regards to the ad tier, or the different pricing tiers, I should say here, do you think Netflix would expand that? Or do you kind of just leave it where it is now with basically kind of the 3 tiers and just let people decide and then use your pricing power to adjust along the way?
Yeah, I'm more an In-N-Out burger kind of model for pricing where keep it simple, give people, value and premium as options, but don't create overly complex structures. And so that's, I think, what they should continue to do. And they have, pricing power in that even on the highest level, you're paying $20 a month. And quite frankly, there are so few things of such great quality for $20 a month in anything that you do. So, it costs over $20 just to park in LA anywhere. So it seems like Netflix could raise prices for some time as long as they do it gradually and not lose subscribers.
Oh, gosh, Ross, I don't even want to tell you what it costs to park out here in New York. But a good point.
I know, it's being generous at $20.
I know. I would take that. I am curious, though, in all seriousness, when we talk about also what gets on those tiers, I ran into something kind of strange. My wife and I, we were sitting down trying to find a movie to watch, and we found this movie, but it said, because we're on the lowest ad tier, the lowest tier, price tier, and it said that we couldn't watch it because of some licensing agreement that they had, I guess, with whoever made the movie, and that we would have to upgrade to the next one. That was the first time I've seen that. It was always like, basically any content you wanted was there. It was just a matter of whether you saw an ad before it or not. And I do wonder, are the studios or the people who, I guess, are licensing this content, are they playing ball with Netflix?
It's not that. It's the legacy contracts that they have with the studios that don't allow them to put all their content on the ad tier. Because, like, let's say I bought, a show from Disney, let's say, and it's on Netflix, because a lot of Netflix content is actually owned by other competitors, which is interesting. But if I buy that show and I have the rights to play it on my regular tier, but now I'm throwing ads on top, but I'm not giving revenue to the original owner, that wasn't in the original contract. So some content still has those contract terms. Everything that Netflix is doing moving forward, hence the new sports agreements and everything, has this ad tier, and probably some sort of revenue share agreement with content creators. So, the way people are getting paid in Hollywood has changed dramatically. It started with the strike that was really predicated by the new model that Netflix created. But now as we move forward, the way entertainment, and not just Hollywood, music as well, the way it functions is much different than the model of the past. And I think Netflix is redefining how that that is, and it's still in flux. And we're seeing that with Disney, ESPN. Like, I'm trying to watch ESPN on my app, and it's now telling me I can't do it, even though I have it on my Spectrum. And then I flip over to Spectrum, and I could watch the game ESPN on there.
Yeah.
And I'm like, what is going on with ESPN? You know, they have all these rights issues that will resolve itself in the next year or two.
Ross, I'd be remiss in not asking you. I mean, you are a California guy. I don't think you're coming to us live from your primary residence. I do have to ask you.
No, I can't live there right now.
I do have to ask you about the wildfires, and I know it's a touchy subject, but you are a California guy, and I know a lot of folks out there are really hurting right now. There's a lot of uncertainty about what comes next. I do want to just get your thoughts on the situation and what kind of hope you have for the future.
Well, you know, unfortunately for me, I've been directly impacted. I'm not in my home, and I was able to save my home, you know, fighting this fire myself, which I highly don't recommend. But I'm in a better situation than most of my friends and neighbors in our neighborhood was saved. But that said, my house is unlivable for the next several months. And it's created a tremendous impact on everybody in LA in one way or another, but especially Hollywood and the entertainment industry, because it was so affected, because Malibu burned down as well. So it's a really, you know, trying time for people, and me included. But it's also, you know, that's the way life is. We have to accept the risks of climate change and the way it's going to affect us all, and there's solutions for this.
All right, Ross, we'll leave it there. I appreciate you sharing that with us. We'll catch up with you again soon.
But my hopes and prayers are for all my friends and family and everybody who's been affected, that we can hold it together, keep your families together. That's the biggest thing. It's just trying to keep your family together. And you know, it's a hard time for people, and it's happening. It happens all over the country and the world, and we all have to take note and make changes to our life if we want to sustain our lifestyles.
Ross Gerber, co-founder, president, and CEO of Gerber Kawasaki.